I would now like to invite Ms. Uma Venkataraman, co-founder and CEO, Ixsight Technologies Private Limited, for her technology presentation on Beyond KYC, Measuring Identity and Intent to Fraud, a 360-degree approach, the NBFC perspective. Uma is one of the early women entrepreneurs of India in the technology product space. She co-founded Ixsight Technologies along with her colleague Savita with a dream to create proprietary IP-based products for the global market. She is an engineer with MBA from Jamnalal Bajaj with leadership roles in FMCG and banking. Her initial experience in the assets department using data to provide relationship graphs of customers was the starting point for Ixsight. Since a decade, through continuous innovation, customer centricity and solution orientation, Ixsight is a leader in providing risk and fraud control solutions to the BFSI sector. Ixsight and Uma work closely with both FCU credit, risk, and technology teams to incorporate potential fraud scenarios within the solutions. Welcome, ma'am. Thank you so much. Over to you.
Hello, everybody. I've just come between you and the last session, so I promise not to overwhelm you with very busy slides. It's going to be very brief and quick, and I'll finish it in 15 minutes, but I hope that I can leave you with at least some interesting thoughts, or at least something different than what traditionally we understand by fraud detection. Some of it is something what you already know. So, and it's based on our experiences with a lot of NBFCs. So the title is Beyond KYC, Measuring Identity and Intent to Fraud. So this is something we all know. Recently, last 3-4 years, a variety of loans, which were earlier it used to be only a few kind of loans like two-wheeler, but today the NBFC industry has got personal loans which are like, in 10 milliseconds, 20 milliseconds. I have had customers telling me we give decisions in, few milliseconds. Otherwise, the customer will, run away and go to the next competitor. It's that kind of market which peaks during festive seasons, which peaks during offers. So there is a mass market for these kind of loans because you have a lot of white goods available. You have mobile phones. So it becomes very critical that as NBFC providers, you would like to take advantage of this, but you want to make sure that you got the right customer. So this is a big challenge. Two-wheeler loans, of course, post-COVID, there's been an increase in two-wheelers. So that's critical. And in two-wheeler loans, there's a lot of, dealers and there are salesmen and there are referrals. So a lot of nexus could happen there. And again, even though, you don't probably do it in 200 milliseconds, you still need to give it fast enough. And there are no there are no guarantors and there are no co-applicants mostly. It's a single buyer. SME loans, no data availability. Unorganized sector, so another big challenge. And lastly, you have property loans and car loans. So here is a quick thing. There is many a slip between the cup and the lip. So said Aristotle. What essentially it means is you just think, everything is fine. He's crossed that KYC thing. All Aadhaar is done, video KYC, this, that, and now you can just give the decision. Faceless, contactless relies on KYC. But it is not so. Between that point where the person has given a valid PAN, Aadhaar, and you have managed it without manpower, online, you still need, and you can still have many ways to check the intention of that person. So what do we mean by that? So there is many a fraud intent between the KYC and decision. And it is just waiting to get discovered through automation, obviously. Okay, so now quickly, many people are doing many things and these are not wrong or anything, but all these things, whatever we can, let's try. Some things look cool, some things look glamorous. So scrape everything that the person has on his mobile. Only the poorest of poor and those who are helpless will give their mobiles to be scraped. The new security law is coming which won't allow you because you are what you search. Your mind tells you what to search. So if you're searching something negative, you're searching something desperately, maybe something is wrong. Psychometric analysis, a lot of psychometrics. People see how they fill forms and all KYC. The other is we have researches by the E&Y and PwC which say Financial institutions are going for AI ML. I've had umpteen clients telling me, do you use AI, do you use ML? So I must tell you, we do. But what is more important, and I'm seeing a future like this, you may laugh, the application form will have name, place of birth, date and time, and you can just do an astrology and predict. So 3-line application form. That's just on the lighter note. So this we covered. So when this is a very cliched word, so I didn't want to put this slide at all. This 360-degree is oft-used. What I'm going to talk to you about is the relationships. See, in the traditional form of giving loans, if you had the ideal way to give loan, we would go to that person's house, we will assess how he is staying with his family, what is culture, like when you give a girl in marriage to a boy, you will check whether the parents are okay, whether family is okay, neighbors are okay, whether where they work is okay, the college where she went to is okay, etc. Now, if you want to give a loan, you want to do the same thing, but you can't do this automatically, is the worry. How can you go and meet people at their home and find out all this? So we think, okay, we should have a social search, This person is available on social media. So he has said something wrong, then maybe the person will not take the loan. We will not give the loan. What we are saying is, can we identify as much of the person's relationships through automated applications? So in a nutshell, when a person applies, can we see whether where the person working, is it something that is comfortable? Are other people in the same company, have they repaid or not? Many two-wheeler loans, personal loans are like this. Has anybody in the family defaulted? Are they applying from the same IMEI number? Are they applying from the same call center number? Are they staying in a building or in locations where there is default? So it's all a nexus. You know why they give women loans? Because they believe they will repay, and in certain villages, the entire village will repay. So good character grows on a person, and you can find that out, obviously, by checking with your own data. Because if a person knows he can defeat your system, he'll come again and again. So that is how it works. So we'll go now. So typically this is how it is. Your normal KYC, and then you go to credit decision, you feed it to credit bureaus. Good enough if they are present on the credit history. So, so what we are saying is in this middle part, and I'll just cover it briefly. So this is all things you are familiar with, but probably that relationship discovery we need to cover. AML check is a regulation, but it can do more good than that. Alternate data we are hearing left and right, so I'll just cover it briefly. And more on application behavior and relationship discovery. How do they apply? Are they applying 3-4 people at the same time? Are they applying from different locations? They are not in your database. Are they reapplying by changing their income, changing their PIN code? How do you know that? Same person is applied again, changed his income, changed his PIN code. How do you know they are applying from the same call center? How do you know different family members have applied at the same time? Because when a person is desperate or they want to commit fraud, they will do it in masses. See, typically this will happen for low value loans, personal loans, etc. And once you have done it is not enough. You have approved the customer. There is something called as retrospective match, which is some of our clients do. Because there is new defaulters coming into the system. The person was very good when they came into your system. Now what has happened? He lost his job, okay, or his wife has lost the job. So now he will default, or and if he defaults, and if his wife or other people in his company have also taken loans from you, they may default. There's a propensity to default. So you need to see the linkages again and again. It is not enough to see it one time. So in retrospect, you need to do this fast. You need to see the cascading effect of it. You need to rematch not the same person. Same person is always easy. It is a no-brainer mostly for most of us. Even there it can be difficult. You need to see it with linkages, relationships in an automated way, and this has been done very successfully. The RBI mandates, of course, you need to do retrospective AML data, so that we will do it because it's forced. Okay, because you may never have any of your customers who are on any AML list, God forbid, but that's to be done. So you need to check the new relationship. So when a person entered your system, he was alone. After some time, his wife entered the system. So you came to know that. Then the wife defaulted, the husband may default. Or, there are 5 people from the same company defaulted and so on. So retrospective, so this has to be done. This is the middle place where we play in a technical form. So this all we know. So, and we'll talk about common directors and guarantors. So some of the things in SME loans, the same guarantor will be guaranteeing multiple loans. The same director will also have a personal relationship. There is a nexus. So how do you know the nexus? One of the other concepts is a concept called, I'm just covering it quickly because we have 15 minutes. There is something called as a group exposure defined by RBI. Now that's a very simple definition. So there are some NBFCs who take it to extremes. Because again, what is the biggest size of the group that you have which is linked, which has the capability to cause damage to your entire portfolio? So there is an applicant, co-applicant and guarantor. Maybe there is even a sales guy in the picture. The same sales guy is supplying other loans. The co-applicant became a guarantor somewhere, guarantor became an applicant somewhere, and you find it hard to link all this. Together they form around 10% of your outstanding. It's a very dangerous thing. So you need to have something called as a group ID constantly monitored and measured. So it's not enough to just do the one-time check on the, at the onboarding stage with some basic checks. So we call this, KYC is just acceptance, risk management, and then AML. Okay, now again in AML we have multiple lists. We'll just cover that. So these are the 5 points. So we believe relationship network, which many of you are familiar, but you only consider the applicant, right? So this is something you may be doing, but I think so in housing loans, checking the property which the person is borrowing against SARSAI is not enough. You need to check it against the existing portfolios, permanent address, correspondence address, and property address, because a person might even hypothecate his own permanent address and you will not know. There are cases like that where the hypothecated address is the same as their own address. An address match, you need to do a pure address match without any other parameter, and it's pretty difficult to do it with some accuracy and be able to give you that kind of comfort that you are not lending against a property previously hypothecated. So this is something we know. So I'll just go to the next. This is something we also do. These are linkages which I told you. This is a final picture. So this is negative list, AML, guarantors, all are linked. So this becomes a big group if you add the applicant, co-applicant. This is the group ID I was talking about. So you have one account, loan account 1000, you have the guarantor, applicant, co-applicant. The same guarantor is a co-applicant and a guarantor in another. The applicant is a co-applicant in another. Together they form a single large group. So this is an exposure ID. Now you may want to change this in different ways and put different conditions, amount total equal to or greater than, number of years, etc. The onboarding intent behavior during onboarding, okay. Now here, so what I'm saying is in the same instant, a lot of people come to us with queries, same instant, at that very same instant, there is Diwali and, you are giving two-wheeler loans or mobile loans or personal loans, some, 50, 100,000 people come at the same instant, you want to give approval, you want to declare, you will approve it quickly. Same instant across branches for different loans, same loans, differing data in each location. In one location the PAN will be something, in another location address is different, but something is common and you cannot detect this because the person is not in your base data. And you don't have time, you need to do it quickly. And I know of cases in credit card industry, they will apply again and they'll marginally change their income in 1 month. Everything else will be same. They know that you're rejecting because of this income. Traditional checks are only to check for the negative area. It is never to check. See, if you know the person can change his income itself, it indicates his mindset. If he is applying in different places, he is desperate. If his family and he is applying and giving different data, he has a potential to fraud you. So this is intent and you cannot measure this in a normal way. Through technology, we also provide that. So you can measure that. We have fraud patterns. Same company is often an issue. Same company, people lost their jobs, they're applying or there's a nexus. Same IP, IMEI, same caller ID, call center they sit applying. So just given a quick example here, these are all parallel applications. Simultaneous concurrency. Anybody I say, they tell, concurrency is very high, we have a high concurrency. So on the 19th day, 8 hours, 17 minutes, 34 seconds, you get this request. Actually, they are all related. In fact, the first three. The next two, last two are also linked in the second address and third address. So it's hitting. And you know, if you have, you need a response in 1 second that they're all matches. So it can be done that fast. So fraud happens at this level. This is the second one, that KYC return data doesn't match with the applicant data. So this is another intent to fraud. The person has applied, you send it to credit bureau returns something. The applicant address is on the top, the green ones are the return value. Now if the applicant has got 3 hits from credit bureau, and you see that the first address is different from the other addresses, 4 different correspondence addresses in a short span, that the credit bureau won't tell. They'll match and send it. You can quickly rematch all the addresses, original applicant address and returned address, and see there is an anomaly. How can a person change so many addresses? Same thing you can do with phone, and it's called a re-verifix or a re-KYC check. You know, he has a propensity to change his address repeatedly. Okay. So this is the one thing. Similarly, you can check KYC, you know, applicant name is Ravikant Sharma, voter ID as Ram Sharma, PAN as Ramakant, and so on. People don't have time. Same is with Vahan. You know, you check the applicant name, the return name is different. You need to quickly rematch it. You have to do it because at the time of giving the loan, you're in a hurry. Or you may not be in a hurry, but the volume is large. You can't have manual eyeballing for these things. So KYC check itself here is critical. So I'm just saying it can be done that fast. So at 10 a.m., 20 minutes, 2 seconds, you get data, you got KYC checked, you send it to credit bureau, you got the returned results, and you will rematch it. Real time fuzzy match. And again, you will check whether there is a similarity, dissimilarity, and you know there is an intent to do something different. The third one is alternate data. So this all we know, and I can tell you from experience that the number of the awareness is so high. There are, you know, board members asking, RBI is putting pressure. Internally also there's a need. I have really never understood, because our applications are from India. There's 1 in a million chance somebody is going to be on those lists. But these lists, they change every day. And there's a requirement for proactive and retrospective. So there are 3-4 types of lists. I'll just cover it. So one we call as AML. So there are terrorist lists, there are shell companies, which are struck off companies. They are not actually shell companies. There are also PEP lists. Then there are, sanctions lists. Then there are defaulters, multiple defaulters lists are available. So all of this, you know, you can do a real-time context check. There are blacklisted people, defaulters lists. There is terrorist lists, which we do a context and then we prepare that. Okay. So retrospective, I covered it. So you can never do one-time risk check. So person's profile changes based on his life journey. They get married, they change location, they lose jobs. In today's environment like stock exchange, a person's life has ups and downs and affects their propensity to pay and willingness to pay. And if you leave out home loans, all the rest, unsecured loans, most of them, they take it in desperation, and then if they are not able to pay, they'll run away. So you need to recheck. You need to recheck your entire portfolio with the most recent defaulters for any linkages. It's not enough to get an individual's NPA. That's why we say relationship discovery. Okay, now finally is this RBI requirement of UCIC, etc. But I think it has more, I've seen a lot of people just not pay enough attention. I think it's a very powerful tool for cross-selling, upselling, apart from the compliance requirement and NPA. So this is something you can do. All these compliances are critical, and they serve CRM, they serve marketing as well. And if you have NBFCs who are deposit and loans, it becomes critical. Even in a person's life cycle, see, they start with a personal loan, then they graduate to a car loan and then a home loan. So you cross-sell to the family. So if you create a common household, the risk is also covered. You're selling it to the same household, so your risk can be less if you identify the households. Rather than identify less risky customers, identify less risky households as well. And yes, if they are married, it's more safer for you. These are some match shots. I'll just take this. So this is all what we do. I'll just go here. So this is something briefly about the what we do. We of course support 120 plus customers and some of the top NBFCs as well. And we work with a lot of the risk side of the team. It's not a plain, it's a software product company, our own product. But we support the risk teams, we support compliance teams, we understand what they need and convert those needs into various kinds of logic. The national CKYC is also run. So these are some clients. You can always contact us later. So on the top, in the middle is you have some NBFC clients. And a lot of the NBFCs, they have various kinds of, requirements, which again we take care of. So this is what I covered. So what I want to say is, and we can also install it fast. There are small NBFCs, there are big ones and large ones. If you're small, you're on the cloud, you have an LOS, don't just go and assume everything will be taken care of by that LOS or by that KYC. It is not hard to implement this with zero coding, with immediate implementation, it can be done. Almost risk-free, you don't even have to invest in CapEx, but make sure you cover this, because even a 0.5% on a very small portfolio can cause a lot of pain, that's all. If any of you feel you would like to do this, you can meet my colleagues. I think Rajesh is there at the back. I'll leave my number also if you want. I'm the CEO and co-founder, but we work very closely with customers. We think the product should satisfy the risk and fraud detection needs to the extent possible. Thank you for hearing me out. Thank you.
Thank you. Thank you so much, ma'am, for this wonderful, insightful presentation. And may I request Mr. Rajaram Manian B, Chief Risk Officer, Adani Capital, to please present a small token of appreciation to Ms. Uma Venkataraman, co-founder and CEO, Ixsight Technologies Private Limited. Ladies and gentlemen, a round of applause, please. We also have the Banking and the Finance Post magazine. This is India's first magazine on ICT innovations in the BFSI sector. Thank you so much, ma'am. Thank you so much for your presence.